with the market. While the Nifty is circling around 17,950 thereabouts in the Nifty futures, quite a few of stocks are actually holding up quite smartly. Look at HDFC Life. That's seeing a fair amount of recovery after the hammering that the stock got all of last week. Trent, of course, is your big winner. Even though the numbers are in line, the stock has shot up 8.5% right now. So that's $100 higher for Trent. There's Cummins, which is looking very smart indeed. Jubilant FoodWorks has seen some good amount of traction. There's Delta Corp. There's Syngene, which is looking very smart. ABB. And amongst the big boys, it's Bajaj Finance as well as Indusind Bank, along with Infosys, which are holding out very, very smartly. Some short covering witnessed on an ABFRL, on an LNT, on a BOB as well. These are some of the stocks which are seeing some short covering. And then, of course, the short pile-up continues on an Adani Enterprises. Even MRF, given that the dividend that they've announced is much lower than, I guess, what the market was anticipating, 5% down for MRF as we speak. Shree Cement, ACC, Adani Ports, Indus Tower, Hindustan Aeronautics, IEX. These are some of the stocks which are under a fair amount of pressure as we speak. Sandeep Sabharwal then joins in on the show to talk about where he sees the market. Sandeep, hi, afternoon. Firstly, a word on NCC. We were just chatting with the management. I don't know if you caught our conversation or not. And I recall this is a stock or a company rather that you did track.
Yeah, NCC is doing quite well, and it's one of the companies in the infrastructure construction side which has kept its balance sheet under control. So their debt levels remain well under control. And in fact, they have come down over the years, even as the company has continued to grow. I think this year they'll do some 11, 12 rupees EPS and grow at 30-40% next year. The stock's quite cheap, and they paid out a very strong dividend also last year. So I think on a dividend yield basis also it's good. So management tends to guide conservatively, and I think that's the reason why there's less excitement around it. But I think from a purely growth valuation paradigm, I like the stock and I think it should do well.
Okay, also wanted your take regarding some of the industrial names. So after the upgrade coming in from the global parents, Siemens is sitting at a life high level, and then you have Cummins, which is also at life high after it posted a strong Q3 performance, but the management was non-committal when it comes to the FY24 guidance. They talked about how Q4 might be seasonally weak and it might be difficult to sustain this growth rate. The question to you, Sandeep, is that should one use this rally as an opportunity to book profits, or does one continue to hold the positions?
So that depends on the perspective of the investor in terms of whether you are long-term or you are short-term. So if you are a short-term investor, then obviously these moves represent opportunities to exit, because near-term, I think given the kind of moves these stocks have had, it's very difficult to think that over the next 3-6 months also they'll keep on rising the same way. If you have a long-term perspective, then I think your view has to be different, because we are in a positive growth cycle for these companies. So although valuations will keep on adjusting in between, but directionally over the next 2-3 years, the outlook is still good.
Listen into the con call bite as well, wherein the management is talking about the future outlook for Cummins.
In all, I can say that with all the growth and the pricing actions, etc., we had taken, we saw relatively better growth compared to the previous year. So as of this time, if you look at the historical data, Q4s are typically a weaker quarter for the company. They're usually the Q3s are the strongest quarter, and then everybody goes away for Christmas, etc., in the global markets, and by the time things start to come back and inventory starts to get built back again, you almost lose a month. So typically Q4s are a weaker quarter. So it's likely to still be a reasonably strong quarter, but I can't comment on how the growth will be in comparison to the previous quarters.
Okay, that's the word coming in from the management of Cummins. But Kunal, what about the index? It seems like some heavies like a Reliance or an ICICI Bank really need to charge up, right?
Yeah, I think the markets are a bit lackluster, you can say. And today is the weekly expiry day, so I think the options data mirrors that kind of a sentiment from the overall indices. Now, for example, there are three strikes which holds a lot of significance over here. 17,800 put options where there is a huge amount of built up, which means that that's a support from an intraday perspective. We saw the index dipping towards that 17,800 mark abruptly in between, but then we saw a very good bounce back from those levels. On the other hand, 17,900 and 18,000 strikes on the call side have seen a very high amount of option writing. That indicates that these are the two important resistance points. So net, I would expect the expiry for the index to be just slightly above that 17,900 mark on the spot levels.
Okay, Nuresh, what about your market view? What are you recommending to do at this point of time, both for Nifty as well as Bank Nifty?
So continue to have a hold view on both of the indices. What we are seeing is we are at the same place. Every day we see one of the two stocks in the index heavyweights hold on to the markets. We are not yet seeing momentum. So today, out of the 20-25 points uptick, 16-18 point comes only from Infosys as such. So overall, we are still stuck in this band. We need more breadth across the Nifty stocks to actually give this breakout over 18,000 as well.
Some of the stocks which are seeing a bit of a result reaction. Hindalco, of course, came out with a muted set of numbers, and that compares with the already weak expectation that the street had, and that's the reason that stock is now bouncing up, because it wasn't as bad as the street expected. The Novelis number, which contributes almost 70% to the company's EBITDA, were already factored in, plus debt has remained stable quarter on quarter, so that is something which is supporting that stock price. But can't say the same for MRF. That one continues to reel under pressure. It wasn't really a very bad set. There was no improvement when it comes to margins, and it was pretty much tepid, and that's why you're not seeing a big reaction on that counter. That continues to trail with a cut of around 3.5%, and the dividend announced of just rupees 3 is also quite paltry as compared to the stock price of almost 89,000 rupees. Page Industries, that one has just reported its numbers, and it seems that it's a bit of a disappointment coming in because the stock has taken a bit of a knock. I'm just reading out the first numbers which are available, and it does look like that the revenue has remained flat at around 1,220 crores thereabout, and the profitability too has come in around 123 crores, and that compares with 175 crore that the company reported last year. So there has been a bit of a slip in performance, and that's the reason that stock is coming under pressure. Even if you look at the other internals, the margins came in at just 15.8%, and that compares to 21.1% last year, 19% margin profile in the quarter gone by, and that's because there was lower absorption, plus the advertising and manpower cost continues to remain high. Separately, the company is mentioning that the PAT margins were at around 10%, and the revenue too has declined 3% on a quarter-on-quarter basis. Not much coming in terms of commentary. They say that they're confident of the long-term outlook, but the near-term outlook looks a bit iffy, and that's why perhaps that stock has taken a knock of around 2.8 to 3%. Separately, Piramal Pharma, that's the stock which is down about 11%, a big miss coming in there. Sandeep, your take as far as Piramal Pharma is concerned, if you track that one closely, or any other pharma name that has caught your attention?
Among the pharma companies, very few are doing well at this stage. So I think among them, it's largely the large cap space. So if someone has to consider investing, I think it has to be from between Sun Pharma or Dr. Reddy's or Cipla if it corrects a bit more. Most of the smaller size pharma companies seem to have troubles at this stage and are largely avoidable.
Right, okay. The one stock which is really on a tear though is Trent. Let's just bring up that stock price up for you. Anisha was just highlighting what a Page Industries is doing. Not bad, but Trent, which is higher by a solid 8.5% right now. Kunal, I think this spurt is coming in after quite a few months of consolidation, if I'm not mistaken, is it?
Yeah, months of correction, in fact, for Trend, because I remember from 1540 or 50 was the high for Trend in 2022. That was, I think, month of October somewhere. And from there on, the stock had been going through a correction. Initially, the correction started off to be more slow-paced, where the anticipation was that it's probably a mean reversion with the kind of gains the stock had shown for the first half of 2022. But then somehow the pace intensified and the stock fell to as much as, I think, 1200 odd levels. So I think it's a good recovery of sorts for Trend. Now, what is required after such kind of a move? Because today's move, the stock has formed a gap up. Now, after such kind of a move, we expect the stock to go into maybe another couple of days of rise, but then comes a period where the stock goes into a correction as well as tries to retest this gap up opening which has happened today for trend. If this gap is not filled, then we expect the stock to get into a bigger recovery as well as a stronger uptrend, maybe scaling past about the previous life highs of 1500 plus.
Okay, since we're talking about the textile sector, let's go across to Vamakshi as well. She's tried to analyze what impact could the earthquake in Turkey have on the Indian companies, because there is some production which has got impaired on account of that. Could it come to the Indian companies? Because for now, it does look like KPR mill is flying away in trade. That could be one of the beneficiaries. Vamakshi, tell us what impact could it have on the Indian companies, and could this mean just a short-term increase in the order inflow, or there could be a long-term impact as well?
Well, absolutely. Let's first start off with Turkey's textile industry. Now, it is the world's fifth largest textile producer as well as exporter. In fact, in 2022, exports stood at nearly $12.9 billion. Exports were mainly focused on the EU as well as the African region, with top destinations being Italy, Germany, USA, Spain as well as UK. Now, unfortunately, Turkey was recently hit by an earthquake, and the epicenter of that earthquake was near the city of Gaziantep, which happens to be an industrial hub central to Turkey's textile industry. As a result, industrial production was significantly disrupted. However, companies with undamaged facilities continued production. Now, even if these companies continued production and there was no direct or immediate impact, economic activity as well as supply chains are affected. This in turn is expected to benefit certain Indian garment exporters, as India's ready-made garments exports to the European Union may improve if Turkey's industrial infrastructure and manpower were devastated. Inquiries may flow to Indian textile manufacturers, as some of them already have quality standards befitting to European qualities which are at par with the US. In fact, we're also seeing that there has been a recent trend in softening trend seen in cotton prices, and as a result we saw that India's competitiveness has improved vis-a-vis competitors such as Vietnam, China as well as Bangladesh. But this opportunity could be partly offset by overall sluggish demand trends amid recessionary concerns. So given all these factors, there are some Indian companies that stand to benefit, with the likes of KPR Mills, Gokaldas Exports, Arvind as well as Raymond.
Okay, Vamakshi, we'll leave it at that. Unfortunate as it may be, but Indian textile manufacturers could see some business coming their way on account of the massive destruction which is currently underway in the aftermath of the earthquake in Turkey. KPR Mills there holding up 5% as we speak right now. The Adani names, of course, continue to fall. There's no rebound in sight for Adani Enterprises, Ambuja, ACC, Adani Ports. All of them are down and out in trade. But Kunal, any closing trades?
Well, yeah, I think many large cap names have started to look attractive. ICICI Bank is the stock which I would look to buy even at current levels. I think 860 is where the futures is right now for the stock. Looks very attractive and forming a bullish pennant formation. So that's a stock which I would look to buy.
Okay, Naresh, what about your closing trades?
So that would be Reliance Industries. It's a risk-reward trade. The stock is setting up for a bounce from that 2300 mark. Could go towards 2450 in the near term. So a stop loss at 2320. So that is a trade I'm doing with a very small time frame for the next couple of sessions.
Time now to slip into a very short break, but as we do that, we here at Times Network have always been looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fande. On this edition, we discuss India's economic growth and how that can benefit you as well.
Hello and welcome to yet another edition of Nivesh Ke Fande. I am Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it, and an easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fun Day. Thank you for watching.
Back with closing trades right here on ET now. The index really not doing anything. I think the story today is outside the index. While yes, there is a Bajaj Finance, HDFC Life, Infosys and ONGC which are doing their bit, but Trent, Cummins, Jubilant FoodWorks, Aditya Birla Fashion, that's where the real story is. Hindustan Aeronautics as well came out with its numbers. We will just get those numbers up for you on your screens, and I think there is a bit of a margin squeeze that they've seen on a quarter-on-quarter basis, which is why you're seeing such a sharp drop down in the stock price. Margins coming in at 17.4% versus 24.2% in the same quarter last year. The PAT, of course, has seen an uptick, 1155. Anisha, I don't know whether this matches up with our expectations.
No, it doesn't, in the sense the street was expecting that execution for all of these defense companies will pick up. That hasn't happened because the revenue has actually declined by 4% on a year-on-year basis, plus the margin performance has been weak. And this quarter, rest of the defense companies, the likes of Bharat Electronics, etc., have also disappointed. So that continues to be the trend. But apart from HAL, I'm also watching out for Zomato because the earnings are expected today. Yesterday, the stock was flying away. At the start of the trading session, it was quite excited, but then just before the numbers, it has seen quite a bit of decline as well. First up, let's go across to Winnie to understand what the expectations are, and then we'll go across to Mayuresh to understand how should one play the stock reactions as well. Winnie, if we have that, expectations going, because CLSA was expecting it could be a bit of a turnaround quarter for Zomato this time around. They could report perhaps profitability, and that was what was expected given the tweets that we have seen from Dipinder Goyal. Of course, yesterday that was to a reaction from VSS, and today he said watch out for the numbers as well. Mayuresh, let me come to you and try and understand how should one play these stocks, the new age tech platform, Paytm, Zomato, PB Fintech. They're quite excited.
Afternoon, Anisha. No, after the Paytm numbers which have come out, the obvious reaction that has come through in all the new age companies is a replica of what has happened to Paytm. But Paytm is actually delivered in terms of EBITDA, albeit with a provision that it is excluding ESOP costs. However, for Zomato, I was going through their numbers for the past few quarters, and the last quarter's transcript in particular. Blinkit is something that is creating a huge drag. So I think if you probably look at the three parts of the business, the food delivery business, at least on the EBIT front, has at least started performing reasonably over the past 2 quarters. The Hyperpure, which is the B2B business, has also started showing signs of traction. However, Blinkit is expected to continue to be a drag in terms of the overall contribution margins. And they are doing some elements in terms of revamping the entire dynamics related to the Blinkit portfolio. However, I think the numbers is something that will do the talking for the stock itself. So my opinion, I think wait out for how numbers play out. And they have to be profitable on the bottom line, which might take some time. The promoters have admitted that being profitable might be a few quarters away. But at least I think let's see some improved performance coming through. But Blinkit is clearly going to be a drag, Anisha, onto those overall numbers as far as Zomato is.
Yep, seems to be the case. Let's see what the numbers entail. In fact, let me take it across to Vinny and now find out what the poll is penciling in and what our brokerage is now saying about profitability from Zomato. Vinny?
So absolutely, Q3 is expected to be a turning point. That's the word coming in from CLSA in their preview note for Zomato. Now they expect a significant improvement coming in the profitability of the company. Do not forget that the company has actually managed to achieve that adjusted EBITDA break-even in its core food delivery business. Yes, there is some bit of a time left to achieve that turnaround in its overall EBITDA, but surely it's moving towards the path to profitability. And overall, a 260 basis point on a quarter-on-quarter basis, we are expecting an improvement improvement coming in overall EBITDA margins. Moving on, 50% base increase, BPS increase we're expecting in terms of the contribution margins for the food delivery business. Also, Hyperpure and Blinkit are expected to come in and see a good growth, as well as what we're expecting in terms of the average order value, gross order value. Maybe a bit of a muted growth is what we're expecting, that on a quarter-on-quarter basis, because what we're seeing coming in is everyone has started stepping out and dine out has started increasing and well. So obviously order volumes also will be a bit flattish is what we're expecting in Q3 FY23. Cash burn, with a quarterly cash burn of around less than 150 crores is what's the word coming in from CLSA. Keep an eye out on Zomato. As of now, CLSA's target is 70 rupees per share.
Okay, so that was about some of these new age tech companies as well as Zomato, but just wanted to flag out some counters on the losing side. You have HAL that continues to slip after that disappointment. MRF2 hasn't done much, down 4%. You also have Shree Cements, which after the disappointment in the numbers yesterday is down another 4% today. And then Restaurant Brands India is down a good 7%. And of course, Piramal Pharma, that has seen a slip of almost 10%. But other than that, what has done well this week is some of these insurance companies, right? So HDFC Life, after it reported a decent set of improvement in the Jan APE number, plus the fact that some of these companies have met the finance minister to look at revision in the limits that were announced in the budget, these stocks have been quite excited. Mayuresh, what is your take? And of course, LIC will come out with its earnings today. What's the best way to play the insurance sector, if at all?
So I think, Anisha, if you probably look at the stack up for the space itself, annualized premium equivalents have been very subdued for the better part of the last financial year. You've seen obvious traction happening because of the product mix in terms of value of the business margins. But with the budget announcements that have come through, the expectations in terms of HDFC Life and Max Life getting hit in terms of top line to the extent of 10-15% for some element of the products above that 5 lakh premium mark staying with them, expected to carry this through across the balance sheet in terms of the bottom line getting hit by 5% as well. So to that extent, I think the kind of damage that we probably saw in both those of insurance stocks, I think you're seeing some element of respite coming through. Now, if you stack it up, SBI Life has the lowest in terms of exposure towards these products, hardly 1 or 1.5% in terms of the annualized premium equivalent. Again, in terms of value of new business margins, consistently held on to that number about 28-29 odd percent. The bank assurance through SBI branches and the lowest ratio in terms of cost plus commissions compared to the entire life insurance industry is at 8-9% compared to 2021 for HDFC, ICICI, Max around 17-18, holds good for the stock. So somewhere I think because of the policy changes, expectations in terms of regulatory headwinds, the embedded value, return on embedded value is expected to take a hit, and therefore the de-rating that happened on these stocks post-budget. But if I stack it up, I think SBI Life, probably something that can go through all these elements in terms of regulatory stroke budget announcements and the dynamics on the balance sheet. 1250 levels to probably watch out for. Those are moving averages that need to be taken out before any substantial.
Okay, makes sense. That's the word coming in on insurance plays. Let's just bring up the HAL, that's Hindustan Aeronautics intraday graph again, because the revenues have come in lower by 3.9%. Net profit, though, is up by about 23.8%. But margins, they've seen a severe compression and are lower than anticipation. Remember, the margins have come in at 17.4%, vis-a-vis a comparable of 24.2 on a year-on-year basis. And it has to be reported that HAL hasn't reported margins less than 20% for 5 consecutive quarters in a row. So the last time the margins were sub the 20% mark was actually in the first quarter of FY22, which was the month of June, which is why you're seeing such a sharp reaction come in on HAL. The only problem of worry here is because of the market frenzy around the defense names, that maybe this could cause some amount of contagion to some of the other defense stocks as well, perhaps because mostly defense was looked at as more of a basket approach. But Kunal, what do you foresee on the charts, not just for HAL, but for a Cochin Shipyard, for a BEL, etc., the entire gamut?
I think they're going through a time-wise correction. So, for example, different stock, of course, Trent, ABFRL, they had a fantastic time in 2022. These stocks, they went into a 30% correction. More importantly, spending a lot of time consolidating as well as going through that correction which is needed when these stocks move significantly higher. I think most of the defense stocks like GRSE, Cochin Shipyard, Mascot Dock. They've actually started off that corrective phase. BEL, I think if I'm not wrong, was one of the first ones to try and come back to its 200 DMA just about a couple of weeks back, and now it's followed suit by most of the other names. So wouldn't be surprised that this time correction may probably extend to another couple of months for these stocks. So I think I would not be in a hurry to try and buy the stock. Maybe if if Hindustan Aeronautics, for example, dips back towards 2200 mark, 2150 levels, that could be a point where we may go for a bit of a contra buying, but not at these levels.
Okay, but all eyes are on the Adani group of stocks as well. And remember, MSCI will conduct its quarterly rejig today, which will be effective from March. So Amit is joining in to help us understand, apart from Adani groups, which are the other stocks that we need to watch out for, and what could be the impact on the Adani stocks given the reconsideration around the free float.
Well, the MSCI quarterly index review is expected to happen today post-market, so most probably we'll come to know about the announcements tomorrow early morning, and the effective changes of these changes in the MSCI index would be effective from March 1st. Now, according to Nuvama and MK, on the probable inclusion side, there are two stocks that come out. There's Bank of Baroda and CG Power. Now, both the brokerages are expecting an inflow of close to 137 to 150 million US dollars in Bank of Baroda, which is nearly 2.2 to 3 times its average daily volume, that is a 20-day average daily volume. For CG Power, Nuvama is expecting an inflow of close to 150 million US dollars, which is nearly 14 times its average daily volume. On the exclusion side, both the brokerages have assumed Biocon to be excluded from the MSCI India index, and the outflows could be to the tune of close to 46 to 66 million US dollars, which is nearly 5.4 to 13 times its average daily volume. And in case of Indus Towers, the brokerages are expecting an outflow of close to 43 million US dollars, which is nearly 9.2 times its average daily volume. However, apart from this, one important announcement that MSCI will be doing tomorrow is the fact that they could reduce the weightage of Adani Group stocks in the index. Now, MSCI has come out with this clarification where they're saying that certain investor holdings in Adani Group companies will not be considered as free float, and this free float will be reviewed and implemented today along with the quarterly index review. Now, this announcement is expected to come on today with the quarterly index review, and the Adani Group companies that would remain in focus are Adani Total Gas, Adani Enterprises, Adani Transmission, Adani Green, Adani Ports, Ambuja, Adani Power and ACC. Now, according to Nuvama, these companies have a total weightage of close to 5.7% and have a holding value of close to 3.5 billion US dollars in the index, and these stocks would be important to track, because if any reduction in weightage could lead to outflows in these Adani Group companies.
Right, we're not done with the Adani Group news flow yet. Francis Total Energies feels that investment in the group is healthy and viable. However, it has put the $4 billion hydrogen investment with Adani on hold for now. So, Amit, give us more details about what exactly is happening here.
First, we need to get through what are the total investments of Total Energy in Adani Group. Firstly, they have around 37.4% stake in Adani Total Gas. They have around 20% stake directly in Adani Green, and around 50% stake in few of the solar assets of Adani Green. And they also have a 50% stake in one of the units of Adani Ports, that is Dhamra LNG. Now, along with this, they had also announced to acquire around 25% of Adani New Industries, which is a wholly owned subsidiary of Adani Enterprises at this moment, and this unit focuses on the green hydrogen business. Now, what Total Energies has said about their existing investment in Adani Group of companies, they have said that the investments in gas and renewable units, that is Adani Total Gas and Adani Green, is healthy and viable, and these companies have good assets and continue to generate a strong amount of revenue. And they are also saying that they have conducted due diligence not only before investing in these assets, but also after investing in these assets they have been doing that due diligence. And they are also saying that the value of investment has already doubled when it comes to Adani Green, and in case of Adani Total Gas, the value of investment has increased nearly 8 times. So that's what they had to say about the companies in which they have invested. But in the companies in which they were supposed to invest going ahead, that is the Adani New Industries, a wholly owned subsidiary of Adani Enterprises, at this moment they have put on hold the investment that they had planned. They had planned a $4 billion investment in the green hydrogen project, and they were supposed to take around 25% stake in this subsidiary. But however, at this moment they have put this on hold, and they're waiting on clarity on the allegations that were put on Adani Group by the Hindenburg research firm.
Thank you so much for that. We'll continue watching for that, but just some commentary at the bottom of your screen regarding Hindalco, and that is what is leading to the spike in the stock price. They are saying the worst is over for Novelis. The demand continues to be quite strong when it comes to the auto sector, and look at the spike that you are seeing in the stock. So when the results came in, we saw a sharp decline, but since then it's recovered almost 4 to 5% because they have started to see a turnaround from the end of December itself, and that is what is auguring well for FY24, and that's why it's expecting it to be a good year going forward. But that's about Hindalco. Let's go across to our charters to figure out what are the BTST ideas that they have for us. Naresh, let me first come to you. What's on your BTST or STBT radar?
So continue to look at large caps. First is the buy on Reliance Industries. The stock is recovering from the 2300 mark. Expecting the bounce back to continue. Stop loss at 2330 and a target price of 2400. Second is a buy on L&T, which continues to hold on to that 2100 mark. Stop loss at 2130 and a target price of 2200.
Now, what about you?
So two buy calls. The first one is actually a buy on Trent. This was also the budget pick which I had highlighted earlier. Looks attractive at 2030 approximately currently. So that's the target of 1380 for Trent over the near term. Stop loss at 1300. And the other one is ICICI Bank, stock forming a bullish pennant formation. So expecting a breakout above this 865 mark. That should lead the stock higher to 888 levels. Stop loss at 850.
Okay, that's the take coming in on some of the top ideas right now. Let's just take stock of what else is happening in the market and how is it that we're winding up for the day. Well, of course, the Adani group of stocks are under pressure. So is Shree Cement, so is Page Industries, MRF, which is down in excess of 4.5%. But yes, Trent, Aditya Birla Fashions, that's where the trend is right now. Both those stocks holding out very well. Jubilant Foodworks as well, interestingly, is looking good. And I think you had specialty restaurants as well as one of the other QSR plays which did not come out with the best of earnings. So while those stocks tanked, Jubilant Foodworks is still going strong, about 3% higher in trade as we speak right now. Within the Nifty though, there's of course Tata Motors which is down, Ultratech Cement, Bharti, Hero MotoCorp, Bajaj Auto, Axis. These are stocks which continue under pressure as we speak right now as well. Just want to bring up a couple of other movers in trade as well. And when you just talk about where one is seeing some short build up, outside of the Adani group of names, Page, of course, is under pressure. There's Abbott. There's Hero MotoCorp as well, which is currently down about almost 2%, and that is seeing a fair amount of pressure. There's Motherson Sumi as well. There's IEX, LIC Housing Finance, IDFC, even Tata Chemicals, which is down about 1.6% as we speak, and Indusind Bank too. 158 is where the stock is, down about 1.6%. Naresh, given your conviction in the private banking names and Indusind in particular, do you think that, sorry, I'm completely mistaken. That's Indus Tower that I'm talking about, not Indusind Bank. That stock is holding up. Indus Tower, let's just bring up that stock for you. 1% lower is where it is currently in trade. Indusind Bank, of course, continues to hold robust. But Naresh, on Indusind Bank, if you had to initiate a fresh long within any of the private banking names, would it be Indusind, would it be ICICI Bank, or would it be Axis?
So, say, in the extreme short term, I would go with ICICI Bank because that is where the risk reward is better, wherein the stock has not fallen as much and has been consolidating for the last 4 sessions. So, ICICI Bank is something which could, say, have a very small stop loss at 848 levels, and this could go towards 900, 930 in the extreme short term. Indusind is something I would be waiting out for a little dip to 1130 for an entry point. But overall, longer term structure looks positive for all these banks, even an Axis Bank. Axis Bank has been relatively stronger in the current fall. So like the whole banks, but as of now in terms of risk reward, ICICI Bank looks the best one.
Separately, M&M will come out with its earnings tomorrow. Of course, we're expecting that the volumes will be up 3.2% quarter on quarter. That's because we already know the volume data. But the proof of the pudding would be really in eating in terms of the profitability, because the margins really are important for the auto companies this time around. We're expecting it to expand by around 90 basis points and the revenue to jump up by around 41% on a year-on-year basis and 3.4% sequentially. Mayuresh, what's your take on the entire auto sector? Would you still stick with M&M as one of the top bets?
Seems to be the case, Anisha. I think the kind of numbers that M&M is posting, specifically in the last few quarters, the kind of demand pipeline that has got created, semiconductor issues largely behind us at this point of time. And therefore, I think the aspects in terms of earnings growth holding out very, very strongly for the stock under consideration. Within the commercial vehicle space, in the same breath, since we are speaking autos, Ashok Leyland has displayed resilient earnings, and so has TVS Motors within the entire two-wheeler pack as well. So I think these three stocks probably remain on our buy watch list in the auto space.
Okay, let's begin winding up for the day. Mayuresh, great to have you on the show as always. Well, we're closing in marginally higher for the index. I don't think 17,950 on the futures is any reason to complain. Well, of course, the Adani group of names were under pressure. Adani Enterprises 11% lower, ACC, Ambuja, Adani Ports, they were all down and out. There was also pressure on an MRF, which goes home with a 4.5% cut. Shree Cement down 4%, Page down 3.25% or so. UBL down 3%, Hindustan Aeronautics down about almost 2.5%, Hero MotoCorp, there was Motherson Sumi, IEX, IDFC, there was Tatacom or Tata Chemicals, I beg your pardon, Indus Tower, LIC Housing. These were all stocks which were under pressure. And then, of course, on the flip side, there was Cummins with a 7% gain. Trent, of course, clearly was your star performer today. Jubilant Foodworks, Bajaj Finserv, Hindalco, HDFC Life, LTTS, Delta Corp have all been big movers today and have seen long build up as well. Some short covering for an Asian Paints, for a TVS Motors, for ABFRL, which have all gone home as winners in today's trading session. Just going to take stock of what the sectoral flavor was like, because clearly led by Trent and ABFRL, it was really textiles all the way. Of course, there were some, non-F&O names as well over there, like a KPR Mills, etc., which also held out. And then, of course, there was technology. It was resilient, I would say. Not a big mover, but resilient at a time when the market was so split and divided and largely lackluster at an index level. Infrastructure was clearly a pressure point led by Adani names. Cement as well has been lower. Telecom as well, it's the usual suspects really. ACC, Ambuja, Shree Cement all down. Indus Tower is well under pressure. So really telecom has weighed heavy on the markets today. So yep, besides textiles, not any big mover. And yes, infrastructure, cement and telecom have been the laggards. Kunal, how does it look like at an index level for tomorrow?
I think it looks okay. 17,900. That's exactly where we've closed. We would be closing for the Nifty, and that earmarks the weekly expiry to be just between the bounds of 17,800 to 18,000 levels for the Nifty. The good part of the market today was the market breadth, where many number of stocks have managed to see a strong follow-through price action as well as a good breakout for themselves. So that would probably encourage traders to carry on positions for tomorrow's trading session. Would go with a bullish stance on the overall markets, specifically on individual stocks.
Okay, bullish stance on the market, and just if you look at the last rate coming in for the Nifty, it's at 17,900 thereabouts, so a bit of a momentum build up, though it continues to be the new age tech platform that are ruling the roost, as well as you have some of these industrials names which were doing well in the trading session, but it continues to be very, very earnings heavy, and that's what we are tracking at this point of time. That brings us to the end of this edition of Closing Trades. From the entire team who put the show together, thank you so much for tuning in.